Cool. So we're going to start this presentation and hopefully we're gonna get out of here without the full hour. Obviously, this is a session for everybody to kind of ask you questions and this and that. But you probably are wondering kind of what's going on with Kendall and then also subsequently Canopy. So we do have some stuff that we want to share over here with us. So bear with me for a minute. I'm gonna pull up the quick presentation I have put in place. So nothing super elaborate because I want to just have an open conversation on this. And I think it's a good idea to have these when there's times and turbulences. So just kind of real quick to share what we have here. Okay. Cool. Let's see if people can see my screen. Can you see my screen, everybody? Yeah. Okay, cool. Yes, Amara is different, Sept than Kendall and the Canopy. We do have an update on that. So let me. Okay, so I'm going to. I know you guys all have a lot of questions. At the end of this, I'm going to open up the Q&A. Since I'm running this by myself right now, I don't have another person who's going to monitor the Q&A. So I'm going to come back to it. Just put your question over there. I'm going to answer them later towards the end. So I do have a couple things I wanted to update everybody at. Just kind of show some stuff. And then I do have like a kind of relatively a big news to kind of share as well. So I'm just going to get started over here. Cool. So this presentation is about Kendall Manor, and tomorrow I have another one for Canopy. Some of our investor is invested in this and the other is in Canopy. So the stuff that I want to share today maybe impact on both properties. Just kind of keep that in mind. So for some of you, you're like, hey, I'm good. I'm going to skip tomorrow. That could be happening. Or, hey, I'm not good. You know, I want to kind of learn some more about Canopy specific stuff. If you're an investor, you're invited to tomorrow's session as well. So Kendall Manor, it's the 272 unit property in Houston that we're currently running. And then some of you guys, you know, noticed that we have a missed distribution. And some people may have questions on there. So we are, for interest of transparency, we want to give you an update as soon as we feel we have the situation under control and also some solution and answer for you. So thus this was created, this property manager, this update is created for you. So also providing some ideas, providing some time for you to answer, for us to answer your Q&As. So real quick, I want to pull up this slide and just give you guys a quick update. What's all going on in Kendall? We have bought this property about in May 2021. And then we're probably about, so now it's September. So we're probably about executing a year plus 4 months-ish. So almost 1.5 year mark of where we at with the property. So I do want to update everybody. So the property is operating fine. And currently, in fact, it's making some really good progresses over here, thanks to our on-site Patsy over there. So a couple things that we have kind of really addressed. One is addressing the physical vacancy part, 10% of the unit. If you remember when we take it over, it was about 80% really occupancy and whatnot. It is down to, you know, we're up to 93% now. It fluctuates between 93, 96%, which is above average in the Houston market. So this, I feel like we have really addressed it, but not only that, the team has turned the units, turned the kind of the previous tenants out that doesn't really quite fit the demographics we want to target, and it has executed loss to lease to burn as well on some of the unit. Now, this is in progress. I wouldn't say we did more than 10% a unit, but we did gone through a whole big eviction and also addressed a lot of delinquencies burning on that. So the other thing that happened at this property, not without challenges, is fiber stream. So fiber stream cable is finally installed. We've been having a lot of difficult time with fiber stream installation in our Texas market versus our Phoenix market. In Phoenix, it kind of went without the hitch. In Texas, they kept broken the line, broken the irrigation lines, broken the pipeline for the water and etc. Of course, this was all covered by them in terms of repair. Canopy kind of experienced a little bit rougher installation than Kendall did. And then so the good news is we start implementing and pushing out the internet cable charges as part of the new leases as new lease come up. And we have actually noticed about $55 per unit capture versus our what we underwrote $30 per unit captures over there. So this is really great and it's above our expectation. One more thing is upgrading for the units. This one we specifically kind of took a wait and see approach over there because there's so many lost leases to address and not delinquency and vacancy to collect. So this is an area we kind of just left it. And then we did do 1 unit renovation to just test the water, and we are getting like over $100 premium on that particular unit. You'll see later on. I want to show a quick rent comparison on that. In terms of increasing perb pills, rebrand, exterior paint, etc. So we have completed quite a bit of cabinetry stairway work. We have replaced the gate, security gate, to kind of lock down the complex. And then we have also started exterior paint. We painted about 4 or 5 buildings so far. There's still additional buildings to be completed. The new paints are really, really awesome. We're going to share some of the photos in our investor updates over there. And then the rebranding is a little bit slower. We have design in hand. We have asked, our previous regional to kind of bid out the bids and etc. Has not been taking a lot of traction on it, but now we're going to, start catching up on some of the CapEx item and explain later on why things are going a little slower over here. So all is in progress, and I think this is the last large items that we're waiting for. And then we'll also are going to do some simultaneous renovations on interior as well, given the premium is a really positive thing. Installing in-unit washer and dryer, we haven't really started too much on this right now. And the main reason is we wanted to kind of hold on to the leases, but there's also another reason, which I will share a little bit later. In general, our CapEx plan is going. It's on some areas really good on income generating items, but on some other areas a little bit slower than we expected. But all in all, the property is in a great shape right now. SAS is implemented, so the 10% water saving, we're kind of not seeing that right now with the rate increases, and there's also a mud cover on top of our water, sewage, and etc. So this is one that's implemented, but we're not seeing the full effect of impact on that. And then the other items are kind of continue as well. So just wanted to kind of do an honest opinion to kind of look at where we at in general. But we're not at the 1.5 year yet. So we're actually kind of trending a little bit ahead of schedule, although not as fast as we kind of wanted to. Obviously, when we communicate to you, we want to be in the promise and over deliver. So we're definitely over delivering on track with what our communicated speed is going to be. But in our opinion, it can be definitely enhanced a little bit as well. So I want to kind of do a little bit of review, just kind of remind everybody what we kind of spoke out on rent comparables and what we're thinking about trying to achieve. So over here, it's a 1 bed, 1 bathroom, and mostly it's the A1s that we have. We're currently trying to target, so our target performance 795 was the rub, averagely about $63 to $80 per unit. Really depends because we use a third-party services to build them back. And then to lift the rent up basically without doing anything to the $80 more. And then we also talked about, hey, if we did rental, we want to raise it up to $820. So it turns out we're actually hitting these rate without even doing renovation, just by market rent increases right now, and then beautifying the exterior and changing the management. We're actually already hitting the range of 795 to 820. So that's a really good start, which kind of plays into the loss to lease burning. And then the 2-bedroom units as well over here. I kind of have a chart over here later on showing where our performance is for these. I think we're also trending pretty good in terms of where we at. And then specifically, I want to note the 2 bedrooms are kind of where we really took off. Our 2-bed, 2-bath on the B1 layouts, which is this one, we're projected at $1,035. We're currently achieving on the lower end $1,095. So that's $60 more than what we have projected. And on our B1 classics, and the range is the upper range at 1120. So if you look at the upper range at 1120, we're already exceeding the renovated projection. In fact, our lowest classic is already exceeding our renovated projection. So this kind of proves the points that we don't really need to go hard on rental, and we're able to capture the lease loss to leases to where it's at without any renovations. Of course, with the renovation, we did see a upwards of another $100 premium, especially on a 2-bedroom layout. So we want to actually try to increase the percentage of that too. So that's kind of what's next we're going to work on. So these are the big townhome style 2x2s. We did do a rental on this one that achieved $1,400 of rent. So that's kind of like more than $200 than what we have projected. Even the classic is $1,300 per rent. And so that is, $125 without doing any renovation to beat our rental performance over here. So there's a lot of room over there. And I think the property is cash flowing pretty well currently. So here's a summary of what I kind of just explained over there. So in general, when we run the property, there's the income, there's also the expenses. Our expenses are kind of in par, maybe a little higher in percentages, and that is going to go down. I think hopefully starting August, financial will share in September. And then September moving on, we should see a slight reduction in the cost to payroll. Specifically, I will share later why that is so. And so in general, our expenses at payroll is a little bit higher. That's the only area that is above budget. All the other areas kind of stay in the budget in terms of cost. And as a result, we're kind of approaching 3rd-year performer rates on NOI. That's kind of where we at in terms of financial of the project. So all in all, it's very successful. Then people is going to ask, what happened to the distribution? This is a property that we're cranking out a lot of cash flow. We're able to do distribution. In fact, before August, this was all pretty much on dot. And then we come to miss a distribution. What happened? So I want to kind of just talk about, sorry for this, a PM update that we have over here. So what happened is at the end of June, and this, I'm just not going to show any slide. There's no slides to show. At the end of June, we were notified that our account were frozen. Our operating account were frozen. These are accounts that held by PM used for operation. And then we start peeling the onion. In fact, a little bit before the end of June, we got a notification, a whistleblower notification that notified us that certain, Robert, the Relic team has started charging us capital improvement fee, like supervision fee, which is not in the PM agreement. So thanks to our accounting, we went back and did forensic testing, like audit onto the accounting. We have quickly notified our lender that this is happening. There's about $60,000 in question over here that the money was withdrawn or withheld from the operating account, which our property management has full access to, which we do not, because typically how PM company is set up is they have an operating account, the rents goes into that, they use it to pay expenses, and then at the end of the month, we do reconciliation and the money gets put into our holding accounts on our site. But what happened over there is that, during that process, $60,000 was withheld and withdrew into another account that PM has. And so our PM owner saying that, hey, this is our construction management fee. We went back to the property management agree and noted that there is not such fee for this particular property. So we got some run around over here. And then we were alert enough to say, you know what, we've smelled fraudulent when fraud is happening. Not the first time we go through a rodeo. Let's just, for safety reasons, let's make sure our lender accounts, basically tenant accounts, is stopping sweeping the deposit, sweeping the rents into that operating account. And instead, we're going to have all the rents sweeping into our holding account, just to be sure. You know, we're not suspecting a fraud over here, but hey, it could be an honest mistake. But until that money is recovered, we're not going to give access to any more money. So we went through lender approval in 40 hours. We went through lender approval for that because the lender has to approval the account changes and all that sort of stuff. We thought we had to place items to put in place. So then end of June, what happened is that we then got another notification. Actually, sorry, mid of July, we got another notification from the same whistleblower from the Relic company. And they said, okay, the payrolls, the operating account are now frozen. There's no money to pay the payroll. This is very odd. So we did a little bit more digging into this. So turns out Robert, the Relic PM, the owner of the PM company, has 4 other outstanding lawsuits to him all this time. Like, because remember, we did background checks and all that stuff with our partners. On a recent development, basically, he has 4 creditors going after him, and then he's basically essentially helping himself to their operating account. Now, we were glad that we have put the lock in place in June. However, the bank has made a mistake and has released a certain amount of dollars into that account, but we have went back and corrected all that. So net, about $135,000 were in the bank account, which we use to try to do distribution, but that's in the operating bank account. We, for all the while, we thought the account was just frozen and we have access to the money. But it needs to be unfrozen for us to access to that. So due to investor interest, we have a problem with payroll issue. Our staff is potentially not getting paid. And 2 is that our accounts are frozen, so we can't do distribution. So these both issues. And then all the while, we think the 135K is still in the account because we have no access to the operating account. You typically do not have access to PM operating account. So Mario, my partner, has went into filing lawsuits and all that sort of stuff, filing petitions and etc., getting transparencies into what is the financial account and start working on trying to unfreeze these lines, right? Because if we unfroze the line, get the money back, we're all good. Meanwhile, also due to these activities, and that's just only being like, you know, a couple days into July, mid of July when that happened. So immediately we went to an overdrive to protect the investors' money. We have basically filed a relic. We have worked out the transition plan into basically August 1st, we have to take over the property. And then in terms of the time, we have just decided that we need to take over the property management in the interim. Because, you know, that's such a short notice. If it's a new bank account, like we just felt that was the best course forward. At the same time, we're also discussing about taking over property management in our Phoenix market. So this kind of fits and align. It's just that all of a sudden we have to do this really quickly. So we did all the protective action. One thing that we thought about to make it right for the investors, because all this has happened to us with not much control from us. So what we did to try to recover basically a total about 195K total, give it or take. Give it or take like $200,000 is in jeopardy is over here. So that's what is being locked in. Now, I do have to kind of say my team did take a very quick action at this. And then due to quick fluorescence sciences with accounting, like just detail on accounting, we're able to kind of stop the bleed relatively, really quickly. So 200K was kind of in stake over here. So we did gone through the whole exercise. There is a $50,000 Robert's LP share. We have garnished that, and then we have added into the investor pool. So that's $50,000 recovered, probably more towards the back end. And also we have actually garnished the Robert's general partnership share, which he has a percentages over there, which probably be equivalent to more than 200K. So all in all, we kind of made it all right, but more towards now the back end to kind of try to recover and make investors right for this. So overall, I think the damage is somewhat controlled. If anything, we came out just about even. We also have owed property management fee for July. since our team has to take over payroll immediately, we kind of handled all that, made sure Kendall is still operating smoothly, because last thing you want is the on-site team also elope. Then you really have trouble with the site. So that's what we did. We removed the relic and the back offices, and we took over the that back office accounting. We onboard a third-party accounting team to help us really speed it up. Sept is a company that we're using. And then we also just kind of start taking operation in-house. We are still in the process of getting lender approval, which we have sent almost 2.5 weeks ago, or 2.5 months ago, the lender approval to kind of unwind everything and getting that moved over to the PM into our site. And our lender currently are still under review. It's with the lender. They've kind of been at it for a minute. But meanwhile, the property is operated by us from taking over. And our on-site has also been, basically she was really good. So we have promoted our on-site to be a regional who's also overseeing Canopy as well, which is a remote operation. So what we also discovered through our whole process is that this is why I say payroll is now going to be better, slightly better, because we have noted that there's a lot of overhead that we were being charged to. And this is something that you would never know unless if you own the PM company and owns the payroll. Otherwise, it's just something that you would never know, and there's no way to audit it. Is basically they're overcharging us on medical insurance and et cetera that they provide to their employees. And then, so as a result, their employees are not getting very good medical, but yet we're being charged for it, overcharged for it. And then our payroll also gets stuffed with some amount of number as well. So in general, we think that is actually moving forward. It's going to be a good news because with the payroll, if we run the PM, there's no overhead, that there's no padding, et cetera for that. So I want to share kind of a little bit of timeline, just puts in this perspective of all what we did during that whole month of just living in hell. So July 8th, we start noticing, so we were informed on ACH. So we started to covering ACH payments for the vendor. So at the same time, there was, because remember when we informed, this has already gone on probably for way longer than when we got informed, probably 2 or 3 months. So while, and then later on, we peeling more onions, we have noted also the updates that we're receiving from regional is not matching with what's happening on the ground. This is more true for Canopy than Kendall, because at Kendall, we have direct conversation with our on-site, who's a very strong on-site. So the situation was pretty good over at Kendall, but we have ACH payments, which is handled by back office for the property management. Our on-site has no oversight to. We basically, as vendor, come to us and say, you didn't pay us for any of these work. We're going to stop working. So it created a lot of challenges over there. But as of July 8th, we start taking over the ACH payments for the vendor. We then actually went ahead and created a new company, Amplitude Property Management Company. We're able to kind of speed it up pretty quickly because we were kind of planning similar, bigger operation in a much smoother manner for our Phoenix properties. So this was kind of in the cards. We kind of have a list, but still it was a lot of work there. And then by July 15th, we took over the payroll for the staff. And July 26th, we did the resident onboarding, completely create a whole system. We had that training for on-site employee corporation, et cetera. So by the end of July, we were officially taking over. So beginning of August 1st, we officially took over as Amplitude Property Manager over our staff and et cetera. So a lot of heavy lifting is on the on-site team. So props to Patsy, who's still there. She's now promoted to regional, working for us directly. And then also our employees start having benefits and all that sort of stuff. We're able to afford much better benefits for our employees, but at a lower cost to the investor because, this overbilling issues that they have as well. So that's kind of like overall, and we're now 30 days into operation. The property we have noticed that previously too is because the regional has stopped paying the vendor bill. So our vendors are reluctant to do work. There's a slowdown in terms of the CapEx work, which leads to the wash and dryer stuff not implemented. And then also the signage was way approved, that the design and the budgets are all approved, but trigger were not being pulled, they were not being followed up. So here, Patsy has kind of worked us through all that stuff and getting the ball continue rolling without this like middleman of regional over here anymore. So that's kind of what the update is of here. So as a natural result, in terms of the asset and the asset protection for, investors, investor money. So we've done all we can really quickly to secure that. And then we feel like we have a method and we have already implemented that. We have fired Robert into the whole organization, and then we organized all the GP to sign a petition to basically garnish his GP share, and we'll be giving that back to the investor. So this should make investor all in whole properly and not being impacted on this particular unfortunate event. And then moving forward, we'll continue trading out, doing more renovation. We're hoping to see a faster renovation. Look like the contracts business is pretty slow right now, or very competitive. So it's really hard to get contractors and et cetera back going again. But by the end of August, we were finally able to pay off all the vendor bills that was queued and et cetera, et cetera. And we're still kind of peeling the onions and discovering new things. But all in all, it's kind of being coupled over there. So then the question will be like, what about distribution? What happened to distribution? So remember all these money that comes in, we need to have cash to distribute. When and later on, what will happen is after we file attorney petition, we were able to get a glimpse of the account, the operating account, because due to privacy, we have no access to that operating account, nor do we know what balance is there. We have been requesting bank balances, and when we receive them, looks like they have balance in them. So turns out they have also falsified their bank statement to make appeal that 135K is still in their bank account. In fact, that they have already back in June went to the bank and removed all the money, right? So at this point, it's a fraudulent, embezzlement, as well as, essentially just intentional fraudulent, because they keep on telling us, oh no, we have the money, it's frozen, we can't give it to you. We have to a lot of different excuses. But once we got a hold of that true bank statement with screenshots from our attorney, we know what is going on, what exactly we're dealing with. And so as a result, I think we've decided not to pursue civil actions, because we already made us whole in general on the balance sheet with this whole garnishing of GP and LP and give it to the investor part. So it makes no sense to throw good money after bad money, because in these desperate situations, people who are stealing money, they don't have money to pay back. So if we paid all these thousands of dollars of a civil suit, at the end of the day, we get a judgment, but there's no way to collect. So it's going basically what we call good money after bad money. But we do think it's a very much of a responsibility of us to prevent this happening to any other people, and also pursue criminal actions. So we have filed a lawsuit, criminal action with FBI, because falsified bank statement is in FBI category, and it's with the FBI charts now. And then all signs are kind of removed. The last piece that we're waiting for is for our lender to agree to us taking over. We already took over, so this is a backward agreement, and also to remove specific for Kendall. Robert was also a guarantor on this, so we're working with lender to remove him from the guarantee of the loan. So meanwhile, this is happening. The 200K, so the missing distribution makes up to $124,000. And then the 200K that was out, we should have leftovers from that for cushion. But we did not. And also due to delay of vendor pay bills, so we have all these CapEx projects set up in the queue, and no money was submitted for reimbursement. So we got into a little bit of cash crunch issue, but we're kind of slowly coming out of there. Mario's making 3 reimbursement requested with Arbor, because the work is already done. We get money back from our lender. So that is going to increase our cash management. I did check in our account. Looks like we're rebuilding up our balances to about 130 in our holding account. So this is almost enough to do distribution. So we will want to, we still want to see what August statement is, but we're going to re-establish distribution probably no later than next month. to basically the Class A will resume first, and then the B and C will get resumed again over there. So that's kind of our projection over here, a little bit of update. So now I'm gonna switch into Q&A. Cool. So now I'm gonna open up the floor just for Q&A because it's very unfortunate event happened. There's a lot of drama happened in the background what we're dealing with. But I think it was a really good time. We're now at a good place where we had a firstly monthly meeting with our PM, and we have continued plans on doing monthly meetings with our PM, like whole team. This gives us a direct control over our operations, etc. Cool. So now some questions over here, I'm sure you will get to a question. Why was there a break in communication? I think if there are issues, then it becomes more important to communicate in a timely manner. How do you plan to address the lack of communication? So I believe the internal communication, we always want to provide as frequent communication as possible, which is why we wanted to do this live webinar. There's also a little bit internal, and I have to just say apologize for that because my asset managers were kind of managing the communication. And then typically process is we receive our financial for the month, and then we does reconciliation, and then based on that we frame the summary of the monthly communications for the investor. What was happening is during these months that we were asking for financial statement, but they were severely delayed because they were cooking books. Now we know. So our team, it was on our fault. Our team just were waiting for these financial instead, sending out these updates before we received financials. In fact, we're still chasing down July financials from them. That was the last month that they reconciled the stuff. And then we don't know, actually, honestly, if we're going to get the actual accurate July financials at all. Like June was taking 2 months for our accounting team overtime to try to chase it down. And July, especially with falsified bank statement, because they were cooking that. I'm not sure, we're probably going to have a gap in between June and July time. I did have discussions with my internal team with the postmortem. And I think it's much better to continue the communication with the investor. Even without financials, we should send that out before the month end. So that is something that we have addressed over here. And again, I want to keep this open line communication by hosting this webinar, right? To the timely and then timely distribution, how will the changes in economy affect your plans and projection? So the changes in the economy affect, okay, so there's a question that's not related with what we want to communicate in this webinar. So I do want to share this one thing. So everybody knows the rates has gone up sky high. For this particular property, we have a 25 base point, 25 base point rate lock, rate cap insurance on this. What this means is that the insurance, the third-party insurance company is paying us, which increases to the cash flow. Per month, the difference between 25 base point increase from our original rate to today's rate. So we're actually getting a good like $30,000 of cash flow from our insurance on this to cap the downside of economy. There is a leg to that because by the time they distribute insurance, insurance with anything, you have to do extra work to get it. There is a leg to that distribution. So that's also another stream of income that's now coming in. And these packages, we had a 2-year rate lock on that. After 2 years, the rate will start free flowing, right? So that gives a little bit of cushion to get all the CapEx completed. And we may be looking at either refinance and sell like maybe next year, way ahead of our projection. So that's kind of like what we're kind of working on. And then this rate cap, which is really a great foresight we have, it has value if we ever decided to sell back or continue using it as an insurance to cap the interest rate increase. So it's a long answer to your question, Sally. In general, basically, with the changing economy affects your plan and projection. No, not really. I think the basis of this property is only 90K per unit. And these are all 2-bedroom units. So we're very confident that we're going to be able to hit our performance on this so far, even with the rate interest increase. That being said, we can never predict how much the rate interest is going to go. The only thing we can control is the speed of operating and getting that return to where it needs to be. So hopefully I addressed all the 4 questions that you had over here. What type of due diligence doing when selecting property? Well, we did background checks. We did reference checks. We were recommended this property management company through multiple sources. We did many discussions, interviews, like everything. So unfortunately, I think, this property, I don't want to speculate what this person was doing. I think that there was other things involved in here, life changes, after we took over the property, basically in the last 6 months, this behavior start to kind of creep up. So we put a check on this, and it was early that we have found the issues. Okay. Okay. So one thing I want to check in, Sally, is like when you say lack of communication, are you getting monthly updates? Because we do send monthly updates on all of that. I want to make sure, because sometimes email being sent on a monthly, you should be getting a monthly update. If you're not receiving that, check your junk box. And if you're not receiving that, please contact your leads, or contact us, investor@easyrealestate.rocks. Want to make sure that you're getting all that information on that. So I do believe all monthly update communication has been sent. And then situations like this, we are doing extra miles to do live webinars like that. So I think that's a particular concern from Sally. So just want to make sure that you're getting that ongoing communication, because sometimes it could be a misunderstanding of like, hey, we're not receiving it in my junk box. Happens all the time with my investors. Okay, cool. Canopy is tomorrow. So we're gonna have a discussion on Canopy. In short, is that with the whole impact, Canopy actually came out more positive because we found the issue early, and the bank didn't mishandle the DACA account request that we had. It was a different DACA company. So all in all, we kind of lost $2,500 in transaction. And then we have garnished Robert's LP share, which is $25K. So that made it positive. And we also didn't pay the property management fee. So all in all, that one is relatively easy in this particular impact. Now, the other impact to Canopy is we were getting miscommunication, not miscommunication, but no, how do you say, someone's trying to lie to us deliberately, right? So we were asking for on-site informations. We're not getting any of our on-site direct communication. So we get all our information from our regional. So it was said one thing, but done the other way. So that was a little bit of issue with Canopy. So bottom line is we're kind of gutting the whole team over there right now after we take over, and we're putting the effective community managers in there now. So there is some uplift, and we'll kind of talk about that detail tomorrow. Cool. Any other questions for folks? Complaints? Thoughts? So Deepito, I will follow offline with you on that. There's a different property that's a Phoenix property. So this is entirely not the same bucket. So Kendall and Canopy is in Texas. This relic thing only affected Kendall and Canopy. And for other properties in Phoenix, that's a whole entire different things. Yeah. Cool. Any other questions? No. Okay. So we're gonna wrap this up. I think, thanks everybody for your patience to work through this short glitch over here. But I look forward to share more financials for August. So the August performance will be on us. I just want to make sure everybody knows that, I do see, you know, the basically, Danny, my asset manager, is on the call too, so no pressure, Danny. But August financials are all on us. And we're already seeing an impact, a positive impact, and just compared to our Phoenix properties, we typically are getting our financials from RPM on the 25th to 30th, which gives us a small chunk of time to work on report. But for the property that we took over, we were able to get our financials as early as the 20th. So we see that this operation is going to go more and more smooth. And hopefully that taking stuff in-house is helping shortcut, you know, the timelines and etc. Okay, well, if no other questions, I'm gonna log off over here. Thank you so much for attending this. If you have any other concerns and etc., again, talk to your leads or talk, you know, send the email to our investors at easyrealestate.rocks. We'd love to kind of fill these questions and follow up with you and getting all your questions answered if you haven't thought about them. All right, thank you so much for your time. Thank you.